The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 20th terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. You can do it right now, 877-927-6648. You can always send me an email, steve@tfn.com. Just in that heading, put radio show question. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading down 14 points at 21,514. S&P is off 9. NASDAQ 100 off 22 points, about 0.4%. Russell 2000, one of the weak links out here off 10 points. It's the transports that are down 1 to 0.3%. They are the weak link off 125 points. Gold is down 2. Silver's off 6 pennies. Light sweet crude back 2.5% or $1.14 as we speak right now. Bonds are up a bit. Leading the chart to the upside is the biotechs. Regeneron Pharmaceuticals up $28. Biogen up 7. The iShares, the IBB up 2 2/10%. Looks like a breakout there. We'll take a look at those. In fact, let's go take a look at one of our listeners. Mike asked if we could take a look at GW Pharma. He owns it. He's added to it today and asked what the charts are saying. And so, Mike, nice trade here. We take a look at GW Pharma. It's up right now today on 217,000 shares. The last swing point out here, Mike, which is just a couple weeks ago, May 25th, had 352,000 shares. So it looks like price is going to be able to move into that swing point area, the top of which is 111.95. Now, 109.18. So between 109.18 and 111.95 are going to be your potential resistance points up there. But it looks like that is where price is headed to. I believe by your email you're looking at this as a longer-term trade out there. So if we put the weekly chart out here for GW Pharma, one of the things that it did a couple weeks ago was it pulled back with light volume into a breakout area. Now, it was 1.1 million shares going into this sign of strength that had 9 million shares. So it looks pretty good to me. And if anything, if it can break above, get above, close above, that 111-ish area. By the way, that was a weekly. I can't say that. I take that back. If it can get above that daily swing point, then you've got reason to believe that this thing will go ahead and make a run for the highs out here, somewhere in the 130-ish type range out there. Right now, again, trading at about the 105.51 area. So that was for Mike. Thanks for writing in. Appreciate it. Let's go back to the markets out here. And in fact, let's go look at the IBB. Let's just stick with this just for the moment out here. And then we'll take a look at the markets, what it is that each of us should be focused on today. So if we take a look at the IBB, what you're going to see out here as I pull this back is you're going to see a nice sideways consolidation. Now, the top of the consolidation where price is taken out today, it's in it slightly yesterday. It's in about the 300 range out here. That's the top of the consolidation. Bottom of the consolidation was set back on, looks like around February the 8th out here. That was a swing point that was tested at about 3.2 million shares, tested with 3.1 million shares, was tested with another 3 million shares back on June 27th. So pretty good consolidation bottom. Now, the cool thing about a consolidation is that when it gets broken to either side, the measured move That means we get to identify a projected price level. So in this case here, it's around the 356-ish type range out there. The level of the consolidation, this is broken to the upside. In fact, we would have an A to B equals CD to the upside that we could also compute. And that's because the B point, whether we were to choose March 2nd, which had 1.3 million shares, or March 15th, which 1.1 million shares, either of those swing points have been broken today with volume. So the A to B, if we take a look at another pattern out here, that the IBB could be following along. If I can click properly, this gives us a price projection of 339 to 355, and at this stage here, I'd say it'd be the 355 level, the 1 to 1.272 A to B equals CD. That should be underway. So we've got two patterns out here that confirm a price move into that higher level, and that is on the IBB. But with regard to the general markets, if we take a look at what they're doing, what should be our focus? We've got Paul Ryan on. He's talking about the tax reform bill. You had Mnuchin on earlier saying that tax reform was going to be done in 2017. So you do have the dog and pony show that does seem to be out in full force. But regardless of whether that's out in full force or not, today it's really going to all be about the Dow. Now, when I say it's all about the Dow, what you and I are going to focus on here is the Dow. Well, it's mostly what it's going to be about, the Dow Equity Futures Contract. And they'd have to say that in order for these markets to pull back, get a nice retracement going, what you're going to first need to see, this is the Dow Equity Futures Contract, by the way, left-hand panel, left-hand chart, I should say, 60-minute. Next to that, 240-minute. Next to that, daily. Then on the very right-hand side is the weekly. And what I want to do is just focus on the 60 and the 240-minute. So the two panels to the left. The reason is that you can see at 21,482. So we've got two profiles. So let me just expand this on my screen out here. Just make so you can kind of see this. So there we go. Okay. So we had a profile in place until about 10 o'clock this morning. And that profile here it was pretty equal. If anything, you would say it was a bias to the bulls. You might say, what do you mean, Willis out here? What I'll do is I'll actually turn price off to help answer that question. Now we're just taking a look at the boxes. So in this box here that was in force till about 10 o'clock this morning, 10:30 really, you can see the blue line slightly closer to the green line, the bottom here. So really buyers were the ones that were in control of this price area. So hitting 21,482 was its message. But there was a brand new profile that formed out here at 11 o'clock. And you can see that the profile has changed a bit. The actual levels have stayed very close to each other. But if you look at it, so this box is inside the prior box out here. But if you take a look, what has shifted is that point of control, that center of the box out here. That says the 21,450 area is what should be tested. And you'll see that, in fact, all of these things have come to fruition once we turn price back on. And you can see that that level, 21,450, was tested after the box was formed. So it's 21,450 that you want to pay attention to initially. If you believe that the markets are headed lower, that level would or should crack, a close below. Not just crack, but a close below it on a 1-hour time frame. If that occurs out here, and if we take a look at the 240-minute chart, what you're going to see here, well, let me just make it smaller. It's a little bit easier. You'll see that this also formed a new box at about 6 o'clock this morning. The structure of this box is bearish. 21,450 fails, you'll see another 50 points to the downside. You'll see 21,402 in your front view mirror. Steve Rhodes with TFNN. We'll be right back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So you got your parameters for the Dow Equity Futures contract to be tracking. Yesterday we talked about shooting star candles. And we talked about how they either work or they don't. And what we meant by that is once you see a shooting star candle form, the very next candle for that specific time frame, you ought to see a lower close. And if you see a lower close, indication that it's working, market should head lower. And as we got off the air yesterday, I can't recall which of the shooting stars that I posted. But here, if we just take a look at the Russell 2000, and we take a look at the equity futures contracts. And what's nice about looking at this chart here is it has a number of different patterns that you and I follow, right? We take a look at the seventh wave moves to the upside, to the downside. They're labeled on this chart here as letters because I also have numbers on this chart here that identify the Tom DeMark counts. So you can see that from the hammer candle, the opposite of the shooting star, back at about 10 o'clock in the morning, looks like back on June the 16th out here, which marked the low. Hammer candles typically identify a market that is trying to hammer out a bottom. Price runs up right into two shooting stars, quite frankly. You had one that took place at 1:30, one at 2 o'clock. So what these candles do nicely for us is they let us know where the buyers and the sellers are and what their thoughts are at that price area. In this case here, the fact that it coincides with the seventh wave move, completion of a pattern, to me is more important than when it just simply completes somewhere in the middle of a pattern, such as the shooting star back here at about, looks like about 22:30. So what is that, 10:30 in the evening back on June the 18th? In any event, we did see the markets move lower. Now, the reason why I bring up the Russell 2000, there's two patterns out here that suggest right now it's trying to form some type of short-term bottom. So the fact that you may use this as a gauge of weakness versus going to take a look at the transports per se. And what I mean by that is we can see that price has been moving lower now with less relative energy. That pattern just formed as we came on the air at 1 o'clock. Now, we don't have a bullish reversal signal here, so this thing hasn't confirmed. But the candle prior to that did form one of those TD 9 counts, one of those setups out there, and that was trading with inside bars 5 and 6 out here. And so it says that the momentum to the downside should pause. Now, if it's going to turn into something more of a bounce versus just a little counter trend rally, what you'll see is a move above Stevie's red line. Currently priced about the 1409-ish area. Yeah, 1409 even Steven out here. Now remember, this chart, I've got a 10-minute delay, so But what this is trying to do and form here, or suggest to you, is it's trying to form some type of intraday short-term bottom that is courtesy of the Russell 2000. I would put more of my weight in watching the Dow and what it does than really I would in anything else as we speak at the moment. Now I have a question here from Sean. Sean says long SOXS. So let's go put that into the system. SOXS, there we go, which I believe is short. That is the semiconductor bear position. Okay, so that's the bear position of the semis out here. So let's take a look at this. And long at 27.82. Right now, this is trading out at 28.71. So you got a little bit of profit. Usually close the position at the end of the day, but was thinking of holding position till Friday. Okay, so what we really want to do is go take a look at the SOX versus the triple. So I want to do both for you. So on my other screen, let me go ahead and get the semiconductor index up on the screen. And I'll give you the data to look at inside of the SOXS as well, but really want to be focused and paying attention to what goes on inside the indice itself, which right now looks like it's trading at 1081.83. Let me make sure I've got the correct data feed, 1081.89. Okay, yeah, it is. Okay, so let me do this here for you first, Sean, so I can see the reasons to say, okay, I'm going to go ahead and take a short inside of the semis. That decision would be that decision you'd consider taking off of the table if they were close above my little red line out there, which is $1,144, $1,100 even and 44 cents. That's going to change by a few pennies. So use the 1,100-ish area if you were to see it close above that at the end of the day. The reason why I say you would consider or you would close that out is because we would then have, or it would then have, a rising price oscillator. It's a bottom panel. Difference between two moving averages, exponential moving averages, 19 and 39, you would have a rising price oscillator above zero. It's fairly bearish. I'm sorry, very bullish, and that would suggest going all the way back to the sell-off that began last week, back up to the bearish engulfing. Short of that, all we're seeing is a bit of a counter-trend rally. Now, your downside potential in this is Stevie's red dash line. It's actually a top-to-mark support level, and you can see that is where price fell to. Looks like in about the 1060 area and found support. So in order for this to really get mojo to the downside, you'd like to see a break below that level. Do I see anything else out here from the set of tools that I use inside the semis? No, just use that 1100 area. No, the 1060 may be all you get. Does this help you to identify whether you should take it into Friday or not? I don't know. That I don't really necessarily think so. It says you're on the right side of the trade at the moment. Inside of the SOXS, if we take a look at just some market profile information for us, this says that you could get 3273, the top of its weekly profile. If you were going to make because it looks like a day trader, you don't hold these overnight out here, Sean, I would say that if this were to close above the SOSX, close above 2906, that's the top of the daily box out there, that would be an indication that you should continue to hold it, and that price may in fact target that 3273 area. What if it doesn't get above it? It's just telling you that price was not able to get above a level of resistance out there. So those are the numbers that I see, and take a look at both the semis from an index standpoint and then this triple header out here, the SOXX. So thanks for writing in there. That was from Sean. I don't know from where, but nonetheless, it was from Sean. So I'm just going to check the emails here real quickly. I don't see anything inside of the den. Now, with regard to the markets, while we're paying attention to, excuse me, if time to time I'm going to be sucking down some water just to try to put something over my throat here, which is still really nasty. Guess no idea where it came from. I mean, I feel good, but talking is not the most fun thing to do. But it's fun to do it with you. Sore throat or not, how about that? You just don't hear the same vigor in here, because if I do that, that'll start to make that thing a bit raw. Anyways, enough of the sore throat. What's interesting about the markets and where we're at as we speak at this moment, there's a pattern. So a lot of people talk about the VIX. You know, you and I, we speak about the VIX, but what you and I, when we speak about the volatility index, the spot VIX index here, you and I just look for patterns. We don't get caught up into that BS about complacency or no complacency. We can't trade that. what we can do is we can trade patterns out here. When we see the S&P 500, we're looking at the cash indice right now. You're looking at closing sessions. It's much easier to see this pattern when we take a look at closing sessions, both for the spot volatility index as well as the top of the S&P 500. We see the S&P 500 make a higher high on a closing basis, which it did yesterday, and we see a rising bottoms pattern inside the spot volatility index, which is what we have going on right now. It's the sign of a potential retracement, which is what you and I expect, right? As bullish as the charts are, intermediate and long term, which they are, there's no denying that. On the shorter term basis, and I'm referring to the daily, we're seeing this rising bottoms pattern in the spot VIX. And that is suggesting to you and I that the market should be preparing to pull back. That's why watching the Dow, which has been the strong link, and even the Russell 2000, the weak link, are important for us to look at today. That's why we just did it. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we were talking about the what were we talking about? We were taking a look at the spot volatility index in the S&P 500. So let's just kind of carry that conversation through. And if you watch us on Tiger TV right now, we're back to the charts that look at the ES Mini, 4 different time frames, 60, 240 daily, and the weekly out here. And so what I first want to do is take a look at so if we take a look at this nice little heat grid out here that John Logan and his team put together, here you can see the S&P 500, or my cursor is. If you're not watching us on TigerTV, we're looking at the market breadth, utilizing TAS market profiles to understand whether it's bullish or bearish as far as the what it's communicating to us market breadth wise this way, which is very cool. So the weekly is certainly bullish. The daily is certainly bullish. The 240-minute chart for the S&P 500 is bullish. The 60-minute chart is one that is bearish. So and when I say bearish, what we can look at here, let me just blow this up. You can see we had a nice little crossover of where, for the 60-minute time frame inside the S&P 500, there were more issues that were trading below the bottom of the box versus trading above the top of the box. As we speak right now, that number is 158 above, 223 below. So on the 60-minute time frame, we've received a signal that says, okay, sellers are in control of the market. You probably didn't necessarily need me to tell you that. On the 240-minute chart, we're not there just yet. So we take a look at it, and I blow this up. This is telling us, as we're just getting close, but it's telling us there's 189 above, 158 below. But if we go then and jump back, which we're going to do, back to just simply the actual price and relationship to market profiles, you can see in the 60-minute chart out here, we're well below any profile. In fact, we've been below profile. There's not anything that has formed since about 4 o'clock this morning. On the 240-minute chart out here, price right now is trading below the bottom of the box. You don't have a confirmation necessarily because market breadth shows that it's actually still bullish, yet price is trading below this. So how do you make ends meet out of this? One of these is going to be right, and which one? Well, let's just say you're not so focused on just the intraday stuff, but you want to know what else we have at the 2440 area. You'll see on the daily and the weekly charts, there's not anything that shows up here. But if we get, you knew there was a but that was coming, right? And if we go back, I need to switch back to some other charts out here, and I'll pull the S&P 500 up on my screen for us. Actually, that wasn't. I meant to pull the ES Mini up on my screen for us, and son of a gun, I think I had that there. Give me a moment. Sorry about that. And sorry if you hear a sniffle every now and then. Where the heck is that cold gum? No, I went to the wrong page. I remember I changed that. Okay, that was this morning. There we go. Oh, I grabbed the wrong. Here we go. Okay, so now I'm going to pull the ES Mini chart up on my screen. You're going to see that price is right now trading just slightly below 2441. Well, right now 2441, and that's really where Stevie's red line is. So you've had price moving higher, doing less relative energy. What today really would really need to see inside the ES Mini is some type of bearish reversal signal. Trading just below my red line, not so much, but trading further into yesterday's bar could give us a piercing pattern, could give us a bearish engulfing pattern. So you'll want to watch that. As far as the price levels for that, the low of yesterday on a daily basis was 2432.75. So any close around there or below that would be your bearish reversal signal out here. So the 240-minute time frame has not made its mind up. So you don't really need to take any action. And really, this is just going through this on a daily basis. Daily, it's shorter term, so I'm not suggesting that you take action, but I do want to be able to share with you what the markets are doing as we speak right now. So now you've got some parameters. You have parameters for the Russell 2000, what it's doing, trying to make a bottom. You've got parameters for the Dow Equity Futures Contract, which I think is the most important of all of these. And now, with regard to those that trade the S&P 500, you know what to be looking for there as well. So hopefully that helps you out. Okay, we're half an hour into the show. We haven't even talked about gold or silver or light sweet crude or anything along those lines. So let's go begin that task. If we take a look at the Japanese yen here, kind of flat on the day after moving quite a bit. Had a nice candle session yesterday. All it's really doing is testing an old level of resistance. That was the high of that shooting star candle from June 16th. So there's not anything out here to suggest to us yet that the Japanese yen wants to try to pull back. If the Japanese yen were to pull back, that would be, we'll call it short-term bullish, potentially short-term bullish for gold and silver out there. That is not the pattern that is in play. If we go take a look at Goldilocks here, let's go back over these profiles. Let's go use my stitched together synthetic contract for gold. what we're going to see is it's bad news bears, I believe. Bad news bears with only one exception. And that exception would be the current 60-minute time frame. If we take a look at that profile, you can see that this is a bullish bias. This is not suggesting that there's a turn. What I want to be able to share with you and what to anticipate is we've got a flat Japanese yen out here. So with a flat Japanese yen, or maybe even pulling back just a bit out here, it wouldn't be out of the realm of thought to believe that gold could bounce up another $5, 12.40, 8.70. In fact, that's what I would expect right now. And the reason is on this 60-minute time frame, the structure of this box is bullish, right? You get the point of control closer to the bottom. That price is held. That's 12.43.10. If you close below that, boy, that just tells you it's bad news, right? You've got a short-term time frame structure of box that should have been bullish, and that has just totally failed. So it'll tell you that traders with inside this range of 12.43 to 12.48, they just simply have it wrong. But to see price get up to 12.48 doesn't tell you that we've made a turn. Just tells you that price is doing what it should be for this price areas, where buyers are the ones that should be in control of that block for the time being. So I hope that helps you with regard to gold. Silver. Let's go back and take a look at silver. Take a look at its synthetic profiles to see what it is doing out here. So this just takes a few moments to go ahead and populate. In the case of silver, you actually have the same sort of setup, and that is that in its 60-minute time frame, you really can't say, I can't say, you can say anything that you'd like, but I can't say that the structure of the current box that formed about an hour ago, 2 hours ago, has a bullish structure. It's really neutral because the center at 1649 is about equidistant between 1654 the top and 1644 the bottom out here. So silver not really giving you the warm and fuzzies out there. And so that is its message. With regard to light sweet crude, let's go take a look at light sweet crude out here as well. Let's go take a look at the stitched contract. 45.35 is where you're trading right now, which is below, well, I take that back. So light sweet crude should bounce to about 43.64. And the reason we're looking at the 60-minute time frame, 60-minute time frame is the only one with any kind of a hope that you would see at least a bounce to 43.64, and that's because the structure of its box also has a bullish structure. I hate to keep using the word structure. You're probably getting sick and tired of the word structure, so why am I saying it again? But this box here suggests to you and I that a bounce to 43.64 is in order, and that is on Texas T light sweet crude. Dow's off 16, S&P down 9. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Have a request from Ruby inside the Tigers Den to take a look at gasoline futures, the August contract. So as we take a look at it, and again, here we've got both the 6240 daily and weekly charts up on our screen. You're going to see everything is red with the exception of the 60-minute time frame out here. And so the question is, oh, that's a different question. Okay. So as we take a look at this, much like we looked at in the case of gold or silver or even light sweet crude, the 1 hour time frame has formed a new profile about 2 hours ago, and the structure of this box is bullish. The bottom is 141.46. Center of the box 141.85, and you can see the top of the box all the way up at the 142.63. So that's where price should head to, 142.63. If price is able to get above that, then our eyes can switch over to the 240-minute time frame, and that's where it shows as the 144.26 level, where price would need to get back inside to maybe have some type of indication that there's a change in trend in place. You really won't have much of a change in trend until you get back into the weekly box, which is at 147.96. So Ruby, thanks for the request out there. I hope that that assists you with your trade or whatever it is you're looking for inside of the gasoline futures contract out there. I don't see any other requests that are out there, but if you've got them, fire away. Happy to take a look at what you'd like to look at. In the meantime, why don't we go take a look at some of the stocks that are moving to the upside and to the downside out here. Let's look into the downside. Chipotle, getting the rocks kicked out of it, whatever that means, but gapping down with volume out here. What did they poison somebody? What did they do out here? Restaurants lose to fast food and customers. So I don't know, something was out. But in any event, let's just go take a look at what shareholders think of Chipotle today. Not much. So gapping down, where's this thing trying to come back into? It's really a good question out here in this chart. You know, you're down below market profiles, both daily and weekly. Weekly bottom of box is 435.51. You're doing that with volume. Do we get, you know, where's the sign of strength out here? Where is the sign of strength? There was a sign of strength back here on January 10, 2017, 3.2 million shares, but you got 2.3 already, so you're coming into that area with some volume, not all the way down there. So it looks like what Chipotle is going to do is pull back into at least that breakout range, somewhere between 392, maybe 399 or so. Doesn't mean that it's going to stop there. Let me put the weekly time frame, see if there's something that sticks out at you and I here on the weekly time frame. And on the weekly time frame, the answer is gets us back into October 24th. That's the bar to be watching. The week of October 24, 2016, that had 12 million shares, the top of which is 415.46. If it closes inside, below for 1783. Might have given the wrong number. 417.83. That's where it closes in between. It closes below. Then that opens up the door to Tesla lows, 362.82. That is on Chipotle. That's taking a look at the weekly chart out there. Also moving to the downside, AutoZone. Let's leave this on the weekly chart out here. This stock has been taking a hammering, and it still is. A ticking and still is. Now, this is perhaps just simply going to get down and test the low from the week of May 22nd out at 573.80 out here. If it closes below that, its next bastion of hope, where is it? You'd have to just come back into this range of about 502 to 552. That is on AutoZone. The request to go take a look at FCX. So let's go take a look at it. Of course, when you trade FCX, Freeport McMoran, you're pretty much trading the Australian dollar as well. We've been through that a number of times, so we won't do that. But this thing right now today, Danny, is trading below its weekly profile level, 1132. We'll put this back on a daily time frame in a moment, but 1132, should be an area of support. If it closes below that today, and you're not today, but by Friday, and you're trading at 1120 as we speak right now, that's not a good thing, but not a good thing. This should have some pretty strong support. I mean, from a weekly standpoint, Danny, so this is where you really got to go take a look at the Australian dollar. Okay, twist my arm. We'll go take a look at the Australian. We'll look at the Australian currency futures contract. But you can see that high volume breakout area from the week of November 7th, the low of which is 1111. So 1111 ought to be a pretty decent support level for you on Freeport McMoran. Now, is there any information here on the daily chart? What's this thing doing on a daily basis? Testing a swing that had 19 million, another one that had 17 million, and today you're doing 10 million. So this is really pulling back on lightish type volume out here, even though it's below the weekly profile. So it looks to me like it's trying to find support, Danny. Do you see anything different than that out here? That would really be my question to you on that. Here you can see the daily breakout levels and bars. So that's our call on FCX. Looks like it's going to be able to find support out here. If it doesn't, it's going to open up the kimono into the $9 type range out here. But otherwise, it looks like it's trying to find support. That is on FCX. If we go take a look at the Australian dollar, and I'm just going to look at the currency contract. I'm assuming I have it here. Yeah. And I'm going to look at the futures contract, see what this says to me, and you'd really be flipping the bar here. But it looks like this is also trading into, it's a daily, into a level of support. The top of its box at 75.7566 out here. So that's what's going on with regard to it. I'll take a quick peek at the email, see if there's anything that has come in. No other requests that I see. So let's continue looking at some individual stocks out here. Let's see, something like what's moving? Coherent Inc., COHR, down 2% or $5. Now, no big deal here when we take a look at this daily chart. This thing had a big gap to the upside back on the trading day of May 10th. That did it with volume inside of this equity of 1.2 million shares. Price tried to come back into the breakout area. Did it a few days ago back on June 15th. Did it with 472,000 shares. Never made it back to the gap. But where it did find support out here, you can see, was at the bottom of its weekly market profile. So Coherent, even though it's pulling back a bit today, it should have good support at 231.78, and it may go ahead and try to move up to the 256.71 level. COHR is its ticker symbol. Let's go take a look at the equities that are moving to the upside. Well, we looked at Biogen and we looked at the IBB. We looked at GW Pharma. You'll see the farmers are the ones that are leading the charge up here. Regeneron Pharmaceuticals up $30. We know that's in a consolidation breakout move that has a price projection of, let's go see, it should punch up on my screen out here, does it? It doesn't, but 556 is the level where this thing is headed to. That is Regeneron Pharmaceuticals. Let's look at, you got Bluebird Bio. What do we have out here that's not a bio? Wow. Net lease. That's how far we've got to go down. and Spark Therapeutics as well. Netlease, NTES is the ticker symbol. That's trading up today with volume of about 952,000 shares into a previous high that had 2.6 million shares. So this ought to find some resistance at the 319.01 level, which has almost hit either 319.01 to 323.10, and that is on ticker symbol NTES. Dow's off 19, S&P down 11. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we have a request out here from the Golf Guy. Golf Guy wants to take a look and see Sierra Wireless. Ticker symbol there is SWIR. Now, we take a look at this. There was no request with regard to time frames or things of that sort. So we'll just go and stick with the weekly time frame out here because it really helps it paint the picture and tell the story. Now, big, huge breakout in Sierra Wireless back on the week of February 6, 2017. wide-ranging bar, big volume, 5.4 million shares out there. So that looks very good. And that was enough to really get rid of and get over a line of resistance, because this thing had moved to the downside with volume, similar volume. Back in November of 2015, there was 5.4 million shares. Now what it's doing here is this week, last week, the week before, trying to get above resistance. Now the blue line you're looking at on this chart here, this happens to be the top of the weekly box out here. And the level you're watching for is 29.84. You can see how that has been strong resistance on a weekly basis. Now the body of any candle you look at, that truly is the essence of price. So as we take a look at it over the last 2 weeks, last week and now this week, which is only through Tuesday, very small-bodied candle. But it's really suggesting to you that it's lost a bit of energy out here. That doesn't mean, oh my goodness, you should sell it, because it still looks like it wants higher price. But it may just need to pull back, and a pullback in this equity could be 27.07, the center of the box, or 24.29. This box from a weekly basis is very very neutral, because that center of the box is right, really almost smack dab in the center of the entire range out there. But looks good, and if it can clear, or when it does close above 29.84, then it's going to go ahead and make a run up, probably for the 38-ish type area. So that is on Sierra Wireless. SWIR is the ticker symbol. I think there was a request to go take a look at McKesson. MCK. Yeah, just would like your opinion. Daughter works for McKesson. Hey, what a great company. Now, McKesson, they supply a lot of drugstores. A lot of drugstores. Do they not? Mike, they've got the right company, right? And if we take a look at its equity, now we're just keeping this here on the weekly basis for the moment. If we take a look at what it's doing, so it's got this line of resistance, so to speak, right? Big downdraft day, Duff, right here, where the high on that week, downdraft day, downdraft week at the 162.76 level. And the volume there was 34 million shares. So prices tried to get above that area. 6.6 million shares, what it did a few weeks ago. So light on the volume. Weekly base, whoops, didn't mean to do that. Weekly basis, there's a brand new profile that formed, and we're looking at the blue lines out here. And since she works for him and you're looking for it, I think the weekly probably is the better time frame. So you've got a brand new weekly profile that formed where the top is below the prior top, the bottom is below the prior bottom. It's pretty neutral because the center really is in the center out here. But it still has a little bit of a bearish connotation, intermediate term time frame. I would change that view if price were to close above 166.18, because one, you'd be above that downdraft area. So that would say that old resistance should now become support. And then secondly, you'd be above a weekly box out there. Otherwise, price could easily push back in the 153 range out there. Nothing wrong with it necessarily, but you don't want to see it close below 153.24. That's at least as of today, June the 20th. So I hope that helps you out, and I hope that this really, I think because you're saying that your daughter works there, there's no reason necessarily for us to take a look at the daily. Plus, we're going to be out of time. So, folks, stay tuned for David White, your favorite polar bear in mind, because it's Tuesday. You got Tom O'Brien from 3 to 5, Andy Heck to take it on home from 5 to 6. Thanks so much for being here. We'll see you on Wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.